All right, well, those are the big headlines that we are tracking for you all evening on ET Now. Well, for now, let's talk about our very first topic at hand. It was our headline as well, a whole host of measures announced by the Reserve Bank of India. But apart from that, we'll also be in general addressing the entire topic of a cash crunch that unfortunately many of us, especially small business owners, may be facing on account of the second wave of the pandemic. So how could you come out of this unscathed as you and your business unfortunately have to face these tough times? Let's introduce now on the show our very first guest, Mr. Navin Chandani. He's the MD and CEO of CRIF Highmark. Navin, thank you so much for taking our time today and joining us on the show. Hope you and your team and family are keeping safe and well amidst this pandemic, and come out safe as well. So to start with, Navin, how can one brace for all the cash problems that this wave has brought about? There is disruption to our incomes. Many of us may be having retail-facing businesses as well, which on account of the lockdowns have to stay shut. So there's disruption on the income side. Plus, of course, expenses don't decrease. In fact, if nothing else, they only increase. There is fear of, unfortunately, hospitalizations, increased medical expenses. So how should one brace for all of this, Navin?
Thank you for having me on the show. Good evening, everyone. Please stay safe. Keeping this backdrop, which is, unprecedented, I think very pertinent question, Mobina. Like we discussed the last time I was on your show, I think most important is to stay calm. I think what we can control is if we are calm. I think we discussed last time, if anybody can create an emergency fund, and this was for the whole of last year, I hope your viewers have created that emergency fund, which they can actually put their hand into and pull out if they are in a tough time right now. But having said that, I think it's important that first we follow and have a budget and see what is essential and what is not essential. Obviously, managing a budget is simple. A lot of housewives, a lot of children, a lot of us as individuals while we were growing up managed our budget. But if we can do that, even for our small business, it would be great, because we have to cut expenses which are not essential. I think that's going to be very, very crucial. In addition to that, I think it's going to be, if I need cash, what are the options that are available to me? First and foremost, it could be an option if I'm a small individual with a small business. Is there friends, family, is there a partner in your small business who can lend money into the business? If I'm an individual and I'm salaried, can I reach out to the employer and see if they have, a possibility to give you a small loan? In addition to that, if you have a credit card, you could use your credit card to make certain expenses. You also would have earned some reward points on your credit card across these years. Could you utilize those reward points maybe for groceries, which are essential, for maybe making utility payments, which are required? You could probably look at that. We also could look at possibly, pre-approved loans. In the past, if you have had your banker reach out to you saying that you are pre-approved for a higher, say, credit card limit or a personal loan, you could look at these options. So the options are many, but I would always say that be very diligent, be disciplined, and understand what your essential needs are, make a plan, make a budget, and then try to evaluate which loan is the best, for how long you require it. And when I say best, what is the rate of interest that you would be actually having to pay for it?
Okay, all right. So what, you mentioned a few of the facilities. I remember last year there were a lot of COVID loans as well that banks were offering. So if you could just enlist and enumerate all the facilities that banks offer. And I would like to add on to that. I know you mentioned personal loans, credit cards as being, some instruments that financial institutions offer customers. But if you could also compare all of these in terms of their costs involved as well, because a delayed payment in a credit card, for example, can carry a penalty of as much as 40%.
Exactly. So you're right. If you have planned well and you need a very, very urgent loan, the paperwork sometimes can be difficult. It depends on whether you have a lender, that means your bank, who has a pre-approved loan that could be really quick. Personal loans are cheaper than credit cards. Undoubtedly, there are medical loans which also could be cheaper than credit cards. Having said that, if the emergency is now and you have to actually give a guarantee for, kind of having somebody in the hospital checked in, I think giving a credit card at that time makes sense. But very quickly know that it takes a cycle cut for you to actually having to make good the payment that you have to make on the credit card. And like you very rightly said, Mobina, that 3% a month translates to around 36% on a credit card. It depends on which credit card you have. It could vary from 1.75% a month to around 3.5% a month. But before that, if you can actually get a personal loan, and a personal loan, depending on your credit history, your credit score, could be in the range of between 10 to 12% from the leading commercial banks. NBFCs would be slightly more higher. And then there are some, who give you very short-term loans, and it could go up to even 24% a year. So it becomes important that you understand which loan you want to take, what is the tenor of the loan that you will need, and how is your income going to help you actually repay the loan. Like you very rightly said, if I need the money now and it's going to take me, say 3 days to get the loan, it doesn't help. So why don't I use my credit card now? Because the due date is going to possibly be 25 to 30 days later. In that interim, organize a personal loan or a medical loan that could be at a lower rate of interest to fulfill the need of actually having to make the payment of the credit card on the due date. We also have overdraft facilities. So if you have a good standing with your banker, your relationship manager, some people could take overdraft facilities that could actually tide over these tough times.
All right. Making it a bit more tricky now, this entire situation is those individuals who already have home loans, car loans, etc. to pay. They are paying their EMIs. And now, of course, unfortunately, there's been a disruption to their income. So how can they manage these obligatory payments without it affecting their credit score? And I would like to throw in the mix, obviously, your credit card payments as well, which may come due, based on your credit card cycle. So how do you manage all these payments then while ensuring that your credit score is not hurt?
So Mobina, what would happen is hopefully you have that emergency fund that you can dip into. If in case that is not available, then the other options are, using a few assets that you have. Gold loan during the first wave is something where we saw really take up. So you could use gold loans as an option. The other one is if you have multiple credit cards, you could possibly spend a little on each of those credit cards. That's a second option. But having said that, keep in mind, you will have to make the payment of those EMIs on the due date. Keeping that in mind, what else can I do? I think if you are having a home loan and it is a big amount that you have to pay on your EMI, the best is speak to your lender, either the NBFC or the bank, and ask them if we can increase the tenor of the loan, or we could decrease the EMI that you have to pay. It could be restructured if you have a good relationship with them. Last year, as you are aware, Mobina, there was a moratorium that had come in wave one that actually helped a few people who actually required it. So there are multiple ways, but I think most important is seeking advice, reaching out to your banker, and seeing what can be done in the best way possible.
Okay, fair enough. Now, you mentioned that, okay, if you have a great relationship with your banker, and I'm sure many individuals who are paying home loans, etc., do have some sort of rapport with, their banker, with the relationship manager. So for them, overdraft facilities are there. They can, sit down across the table, talk about restructuring options as well with the banker for their pending credit card bills, EMI, so on and so forth. What about those new to credit, Navin? These are the guys who don't really have much of a credit footprint. So if they will approach a bank or a financial institution as well saying that, listen, I need money for maybe going through a personal expense, I mean, I have to pay a medical bill which has just come about, or whatever it may be. How should these individuals approach the financial institution or bank? Because obviously the banker, the lender as well, is going to be extremely hesitant before giving him or her a line of credit.
Right. So, Mobina, what I would recommend to our viewers who are new to credit, and now new to credit does not mean they don't have a relationship with a bank. They would have a salary account, or they would have a current account, a savings account. So usually an individual would have some relationship with the bank. Now, depending on what the average balance has been and what the income has been over the years, maybe some of the existing relationships could be leveraged. The second thing could be done is that actually seek some advice. There are a lot of new fintech NBFCs who are catering to this segment, which are new to credit. You have to keep in mind that the rate of interest might be slightly higher, but the loans are available. Also, one other important thing is if you are new to credit and you are a salaried individual and you are earning obviously monthly income, reach out to your employer. Maybe they can also help you. Also, we have the Employee Provident Fund. In extreme circumstances, speak to your finance head, HR head. Maybe they can help you actually take an advance against that. If you have some investments which you have made in the past, may it be mutual funds which are liquid, you might want to dip into that. So there are multiple ways, Mobina, that I think we could actually address that situation. It depends on what is the need, for how long it is, and then you take the most informed decision, keeping in mind the terms and conditions, the tenor, and the rate of interest that you will eventually have to pay.
All right. Okay. I want to talk to you about the variety of announcements made by the Reserve Bank of India as well today. First up, maybe just get in your overall take, especially from a customer, from a retail borrower perspective. What did you make of it, all the announcements? What is positive, if there are any negatives at all as well?
Movina, announcement, we'll have to go into details, but I think it is positive. Right throughout last year, we have seen RBI has intervened and come up with a stimulus package at the right time. Again, the announcement over here on the restructuring speaks about the individuals or small businesses, MSMEs, who have not taken a restructuring in the first wave. So they have not taken restructuring 1.0. They are eligible for 2.0. I think overall, they have also increased the limit. It is going to be as of 31st March 2020, what your standing has been. And then you can actually work with your lender and understand that. But again, in everything I say, this is to be used very, after taking a complete overview of what this restructuring means, how is it going to impact your flows, what is the rate of interest. So I think it is to understand the whole picture, speak to your banker. Because what is going to be important is that you understand the whole picture before making a decision. I think it's also important that during this tough time, if you take a bigger loan and if you can't pay back on time, your credit score will get impacted. You might pass this tough time, but if you don't make a payment which was due and your score actually comes down, it will impact your future credit that you would ever actually need. So you have to be very careful. I think overall what RBI has done today is a start. It's a good start, but yet it would be important that you work with your banker, understand what you can get, understand how it will impact you, and then take the right decision.
On your interaction with various individuals who may have opted for restructuring in the phase one of the announcements made by the RBI, what was the response like? Did restructuring help them, or were there some tricky terms and conditions which the borrowers found difficult to adhere to later on?
So Movina, we usually work with the banks or the NBFCs, mainly the lenders, right? And I understand that each one, whoever has taken it, I think it is important to understand from both sides. The banker or the lender explains to the consumer. It looks like that in a lot of cases, it has actually helped sustain. In fact, I know even the micro loans, for example, there had been top-up loans, there had been restructuring of loans, and it has helped them. It's important, like I said, overall to understand if there is going to be a future cash flow that is going to come in. So it's going to be a holistic thing. I think in the wave one, it did help the consumers going to their bankers or to their NBFCs to understand how it works. And the same thing can happen now if you have not taken it in the first phase.
All right. Just to reiterate for our viewers, Navin, let's say I see this restructuring option and I approach my banker, or my lender that, look, I think I'm having a tough time paying, so I want to restructure my loan. Would it at that juncture impact my credit score?
No, it won't impact at that moment in time. What is going to impact is that you have an understanding with your banker or the lender. If they are restructuring your loan for a particular period of time and you are making payment, it would overall, I would say in the long term, not impact because you will fulfill your obligations. But if for whatever reason you don't, then it would impact your score. So it actually overall depends on what kind of restructuring you go into. And there are signals that come into the bureau that there is a restructuring happening. But restructuring and not being able to fulfill the restructured obligations on due dates will be worse off, in my opinion.
Okay, so when you go to your banker, it's not going to affect your credit score. But after restructuring, if you are still unable to repay per the restructure and the new terms and conditions, then it is going to hamper your credit score. So that's the reason why Navin is saying that even when you decide to go into this, you decide to take this route, you have to ensure that you are fully aware of all the terms and conditions before you do. Otherwise, you have gold loans, personal loans, overdraft facility, credit cards. These are all viable options. I think with that, we are out of time. Navin, thank you so much for joining us today on the show. Appreciate you giving us your time.
Thank you. Bye-bye.
And with that, we will wrap it up on The Money Show as well. Thanks for watching.